The importance of tax management, planning, and compliance to small and medium-sized enterprises. Small and medium-sized enterprises make up the majority of businesses in the Philippines, and it has a significant impact on our economy. Small and medium-sized enterprises should implement and practice tax planning, management, and compliance to ensure long-term sustainability and help them operate indefinitely. Through effective tax planning, all elements of the financial plan fall in place in the most efficient manner. This results in the channelization of taxable income to different investment avenues, thus relieving the individual of tax liability. The objectives of tax planning are: first, to have a tax burden reduction; second, to avoid any sort of litigation; third, to avail the benefit of concessions and exemptions; fourth, to provide a financial cushion or backup for the use of contingencies in future; and lastly, to discharge the responsibility of a good citizen. The benefits of proper tax planning is that it makes it easier to build your personal finances, it lessens your tax burden, and it helps you avoid deadline stress. Tax management deals with filing returns in time, getting the accounts audited, and deducting taxes at source. Tax management helps SMEs in avoiding payment of interests, penalty, and prosecution. It is a regular feature of business enterprises and a form of tax planning. Tax avoidance refers to the use of legal methods to minimize the amount of income tax owed by an individual or a business. This is generally accomplished by claiming as many deductions and credits that are allowable within the law.
Tax evasion. Tax evasion is using illegal means to avoid paying taxes. SMEs should avoid tax evasion as much as possible. Tax evasion or failure to pay proper taxes can lead to criminal charges that are subject to penalties and fines. So these are the common examples of tax evasion. First is not reporting or underreporting income to the tax authorities. Second, keeping business off the books by dealing in cash or other devices with no receipts. Third is hiding money, shares, or other assets in an offshore bank account. And lastly, misreporting personal expenses as tax-deductible business. Tax compliance. Small and medium enterprises that run without the adequate keeping of records, accurate determination of taxes can be exposed to BIR audit. If BIR examiners review your records only to discover that you don't have any document records or a basis for your declarations, this will be a burden to you. To guarantee that everything has a clear foundation, you'll need a sound tax compliance system. Taxes are often viewed as a burden by enterprises, but it is more expensive to settle tax assessments because it contains surcharges, interest, and compromises. Non-compliance will be a burden or an added responsibility to the SMEs. They have to pay their first supposed tax due, penalties, and it can affect the economy with economic agony or opportunity cost. If the SMEs will find tax compliance expensive, imagine all the penalties of the non-compliance. For the compliance requirement, for the primary registration, you need application for tax identification number or the TIN number and the application for registration update. For the secondary registration, you need registration of books of accounts, application for authority to print receipts and invoices, application for authority to use computerized accounting system and or components thereof, loose leaf books of accounts, and application for permit to use cash register machine or CRM and or point of sale machines. All individuals engaged in trade or business shall accomplish and file the application on or before the commencement of business. It shall be reckoned from the day when the first sale transaction or within 30 calendar days from the issuance of mayor's permit or professional tax receipt or PTR by the LGU, whichever comes earlier.